18 of 19 series are aligned with STAGFLATION mild this morning. That is a tightly clustered macro configuration under the framework. The current macro regime is STAGFLATION mild, with a confirmation score of 18 out of 19. In the engine's math, this macro regime describes an environment where growth momentum is decelerating at roughly minus 0.6021, while inflation momentum is accelerating at about plus 0.0081. The coherence score is 18 of 19 series aligned. And the same figure holds for the confirmation score, placing today's reading in the higher confidence bucket of historical observations. Historically, regimes with a confirmation score in this range have persisted in about 52% of comparable cases over 3-month windows, with expansion combined with accelerating inflation, recorded as the most common transition. Compared to last week, growth and inflation momentum are largely unchanged, and the confirmation profile has remained pinned at 18 of 19, suggesting that the stagflationary configuration has stayed mathematically consistent rather than rotating toward a new regime. In past environments that looked like this in the data, markets have often shown compressed equity multiples, firmer commodity pricing, and a bias toward higher real rate volatility, all as historical descriptions rather than prescriptions. On the signal level, the 10-year Treasury yield is a key anchor. The yield sits near 4.40% this morning with a green momentum label, defined as a 30-day rate of change above the 60th percentile of its 3-year range. In 9 of 11 comparable periods, this coincided with measurable acceleration in the inflation composite within a 2-week window. That is a conditional frequency in the historical data, not a forward path. Labor shows a different but coherent picture. Initial jobless claims are classified as green momentum, again meaning the 30-day rate of change is above the 60th percentile of the trailing 3 years. Claims have been drifting higher, which the framework records as softening in labor conditions. In 8 of 11 comparable periods, this coincided with a deceleration in broader employment growth within roughly 3 weeks. The engine is only recording that those pairings occurred at that rate in the sample we studied. Credit curvature, captured in the 10-year minus 2-year Treasury spread, T10Y2Y, is tagged red. Here, red means the 30-day rate of change falls below the 40th percentile of its 3-year range, consistent with renewed curve compression. In 7 of 9 comparable instances, this coincided with wider credit spreads and more defensive credit pricing within 1 month. Again, those are historical co-movements, not instructions. On the equity side, broad technology remains a focal point. The sector ETF level sits near recent highs, with a green momentum label defined by its 30-day rate of change above the 60th percentile of the past 3 years. In 10 of 14 comparable periods, this coincided with increased dispersion between growth and value baskets within a 6-week horizon. That observation speaks to relative behavior in the historical data set rather than any directional call. The conditional map highlights 2 triggers the engine is tracking. If the 10-year yield crosses 4.45% and holds for 5 consecutive sessions, inflation composites showed acceleration in 9 of 11 comparable instances. In the framework, that would mathematically strengthen the case for an expansion to acceleration transition, but it remains a conditional statement only. If the fear and greed index drops below 15 and holds that level for 5 consecutive sessions, the confirmation score deteriorated in 7 of 9 comparable instances. Historically, that configuration has coincided with regime confidence moving down a notch into a more fragile alignment zone. The map is live. These conditions are being monitored daily across all 19 series. Atlas is the automated rules-based engine inside Given Analytics. It does 2 things in parallel. First, it publishes a view of the macro environment, the macro regime, the confirmation score, the coherence score, and the historical base rates we have just reviewed. Second, Atlas runs a fixed 4-layer mathematical framework: price structure, rate of change, risk regime, and market participation, across 407 symbols every trading day. When all 4 layers line up on a given symbol, Atlas records that reading and its condition log as a potential configuration under the framework. These are time-stamped, rules-based model outputs for members to study. The environment view and the symbol-level condition log are separate outputs displayed side by side. The regime does not select the symbols. The 4 layers do. Atlas monitors 407 symbols independently of any regime label across those 4 layers, so members can observe how conditions have behaved across a wide range of prior environments. Atlas is potential educational, context for understanding historical mathematical behavior, not a decision engine. The morning brief is the public surface. The live Atlas dashboard shows the full 19 series regime map, today's mathematical conditions across 407 symbols, and the historical archive side by side. Members study the environment and the Atlas outputs each morning. If you want to track this alongside us, the live view is at givenanalytics.com.